I've already 3x my money in the stock, and I'm going to do it again. So a while ago, roughly a year or so ago, maybe 8 or 9 months ago, I made a video on a little company called Tapestry, which you could watch up here. And if you bought the stock when I made the video, and then bought more as the stock continued going down, you would have already tripled your money by now, more than tripled. This stock has already exceeded my expectations, and it's apparently just getting started. So if you like this content, like, subscribe, and let's get into it. So just a very quick overview of what Tapestry is. It's basically a fashion business based in New York. It used to be called Coach. It has 3 segments. There's the Coach store, which basically sells handbags and luxury high-end stuff. There's Kate Spade, which sells more modern clothing. And then there's Stuart Weitzman, which sells luxury shoes. So in order to tell you about Tapestry now, I need to go over their history a little bit. So Tapestry is a company that has been struggling the past couple of years. Until about 2018, it was doing exceptionally well. But then there was a CEO, Victor Lewis. Long story short, he didn't do a very good job. Shares started plummeting. Eventually, he was replaced in 2019 by Jai Zeitlin. He started turning the company around, making moves, making gains, and the company had been doing well up until what happened. Economy crashed, stores closed, entire country locked down, and this is a growing company, even before Victor was replaced. Now, you can sort of see the issue here from 2017 to 2018. Although there was a massive jump in revenue, there was a massive jump in cost of revenue as well. And you can see their net income was still noticeably lower despite the massive increase in revenue. I mean, the company was not running itself well. 2019, it got a little better. A slight jump in revenue, not as big as from 2018 to 2017, but you can see their bottom line jumped up quite a bit. So they did grow in 2019, and then pandemic happened, stores were forced to close, revenue dropped, company reported a massive loss. Jai was replaced, although he was doing well, but there was some sort of scandal. He was replaced by Duran Carosierat. I don't know how to pronounce the last name. And that all changed at the end of fiscal year 2020 when they launched their acceleration program, in which they went hard on turning into a growth company. They were going to strip out the fat of their organization. As you can see here, transfer into a leaner, more responsive organization. This means they had to close some underperforming stores. They wanted to drive their gross profit up. They wanted to drive down operating costs, all the stuff that was causing them to lose their bottom line. This program had many different initiatives, such as expanding their growth in China. They're going to restore profitability to Stuart Weitzman, and all this other stuff. You can pause this if you want to and read this, but they went really hard on trying to turn into a growth company. And as you're about to find out, it's paying off. I want you to take a look at this latest quarterly report. This is from their latest 10Q. Despite the drop in sales, pandemic, can't be mad, they still managed on a 3 months basis and a 6 months basis to jump up in net income, especially on the 6 months basis. They went from 318 million to 542 million, despite the drop in revenue. Like, that is some streamlined business. Still not convinced? Take a look at their cash flows. 561 million provided by their operating activities to 746 million during a pandemic year. I mean, to say these guys have bounced back, even with the drop in sales, is an understatement. Gross profit went from 66.6% to 69.6% year over year. Operating income jumped from 20% to 23%. 23.1% year over year. They recruited 1.5 million new customers in North America in this quarter alone. Triple-digit growth on their e-commerce network. 30% revenue growth in mainland China. Their outlook for the rest of fiscal year 2021. We're talking high single digits to 10% revenue growth. Right now, they are trading at 43.09 with a forward PE of 14.9. Anything under 15, any forward PE under 15, and this market is fantastic. And that's not even the best part. When you factor in the growth, the PEG ratio, anything below 1 is ideal. So for a PEG ratio to have 0.89 is absolutely phenomenal. If we look at analyst estimates, now this is the average, and I know we can't take this as gospel, but this is a great benchmark to form some of our own opinions from. They're expected to go from a 0.97 EPS to 2.6 this year. And just to give you an earnings history, aside from the pandemic, they've smashed every earnings report since. They're supposed to go from that to 2.6 and then to 2.89 at the end of the next fiscal year. And keep in mind that these revisions are not a static number. As time develops and the company develops and stuff, these numbers get moved. And if you look at the EPS trend, these revisions have been going up consistently. Right now we're talking, if we believe the analysts, an EPS growth of 168% next year, 11% next year, and then 48.12% each year for the next 5 years after that. If Tapestry performs anywhere close to this, they're going to 3x again. They're going to 3x again in 5 years. As long as Tapestry performs anywhere close to this. And judging by the history, they're just going to keep smashing it. So given the valuations and the analysis and the growth potential, if you think this company is worth it, this price is still an excellent price to buy it at. This is still an excellent price, and I might do so myself. And Tapestry is just starting to grow. Right now, they primarily operate just in North America, and they're starting in Greater China. There's a lot more China for them to grow into. And then once they're done with that, they still have, I mean, they barely have a presence in Europe other than some licensing contracts and stuff. I mean, they still have all of Europe to grow into if they so choose. Like, there's a lot more growth ahead of Tapestry that they can do. I am very happy with how Tapestry is doing, and the more I read about them, the more, I see how they perform as far as the earnings report and all that stuff. They just keep surpassing all my expectations. And I'll tell you this, despite me having already 3x my money, if they have earnings, I think at the end of this month, if the stock price drops, I might buy a few more shares. I might still buy some more shares because, yeah, I'm extremely bullish on this company. And if you take a look at my portfolio for the week, you will see that yes, I'm up 219.46%. That is above a 3x. I think in my video a year ago on Tapestry, I mentioned that if this stock ever hit $32, I would probably within the year I would probably sell out. I am really glad I didn't do that. If you look at my history, I started buying in June at $13.84, and then as it dropped into the 12s, I just kept buying more. And I will continue to buy more if this stock drops significantly after the next earnings report. Probably not heavy, but I'll buy a few more shares. I like to get this to 100 shares and then let it sit for the next 5 years. But looking at the rest of my portfolio, nothing major has happened this week. Facebook finally broke 300, which puts me at 72% gains. Revolve, that's going to be my next video. I'm up at 254% gains, so I'm doing even better than Tapestry. Hyliion still holding strong at minus 17.77%. Cisco, another, one of the stocks that has not had a very kind couple of years is finally back on top. We're up 24.28%. We're doing really well with that stock. I have a total equity of $48,879.14. I am up 37.51%. If things go well, I should hit my 50 grand milestone at the end of this month, beginning of May, and then I'm probably going to go out for sushi or something. But anyways, take care, have a great day, and eat your vegetables.